Good afternoon, everybody. It's John Seville from Acorn Wealth, and it's your executive summary. What a great day. We had the SPY basically had an inside day today, so it kind of created an equal low but a lower high, and just bounced off the resistance from this underlying channel, which is great. So far so good. Haven't broken open range yet, but this is the making all the right kind of noises. So basically, if this flag continues, we'll look at the conservative flag first. We're looking at a breakdown from here to here, which means a break on the S&P down to 1810 from where we're currently at. So that's what we're possibly looking at. Could be very, very, very exciting. Now, a couple quick things to address. There was a few comments about why we're looking at so many longs recently. Do keep in mind that we're 90% of our corporate trading fund is in puts on stocks, January to March 2016 expiration puts. 90% of our money is all invested on the short side of the market. So if you're seeing these longs in the last few executive summaries, it is because we are looking at ways to hedge recently against the upward movement and taking some quick short-term profits to the long side as we sit on our golden goose, so to speak, which are the puts that we hold in the market, which should pay off hopefully to the degree of 500 to 1,000% by January. If you are joining us late, you need to go back a week or two and check out all the puts that we've been buying. To just have a quick chat about some of those. One of the recent ones that we had highlighted last week and last night was how strongly we felt about INCY as a short. And this is beautiful. I mean, it just plummeted today. Now, down from 130, where we said this thing's going to drop, down to 115 today. So, almost a 12% drop, essentially. So anyone buying puts on this should be well in the money already. This one doing really, really well. And a shout out to Scott if you're listening. I know that you're heavily invested in this one, so hopefully that gave you a nice smile to your face today, and anyone else who was trading this. INCY, ZLTQ. Now, we're not going to add any new stocks tonight. We're going to review the existing ones because we have a lot of existing positions. So right now, it's not about needing to trade every day. It's about being patient and selecting high-quality trades. And these are the ones that we feel meet the parameters. ZLTQ traded right into its resistance zone. So this has the signs of momentum. You said I'm still cautious of this one, but it is starting to turn. Not as strong as the other ones, but it is in its short zone today. You see it tagged up, pulled back as well. So ZLTQ also on the watch list. The other one that's looking like it may be poised to drop is HOG. Now, we bought a bunch of, I think it was $50 and $40 puts on this. And so I do hold a short position in this one, and you can see that this is kind of looking quite nice in terms of the money flow just dropping away. You can see that it's we've got this multiple bounces along the bottom of very bearish closes. So HOG looks like it's about to drop, should get down to at least $51. TNP also trading up into its resistance zone. I mentioned last week this you'd probably get another opportunity to have a good shorting opportunity under $9 on this one that would probably hug this level. It came right up to that today and bounced straight down off of it. So TNP also going to be interesting to watch as this market unfolds. Basically, the S&P 500 looks like it's going to fall apart here this week, and we've run a lot of our scans tonight, found 7 longs and about 20 new potential shorts. So just looking at the distribution between where the patterns are forming, it's currently all to the short side. So that's obviously very exciting. The two that we talked about last night, CREE, CREE, is performing perfectly. So that looks excellent from an option standpoint or a stock standpoint, looking like an excellent short trade. And EXPR, also the one we highlighted last night, looking perfect. As soon as it breaks that support line, that should drop like a stone. So in terms of how we address the longs, things like CYTR, for example, was one of the longs that we'd picked back on, back at September 4th, around $2.30, $2.40. I mean, that hit a high today of 315. So, I mean, significant gains on that. And I would start looking to take profit on longs at this point. I feel the market's at a high risk that it's going to turn, low risk that it's going to rally. So, from a risk-reward standpoint, I'd be taking the reward right now and moving aside. We've also got AU, which is on a rampage. This one we were looking for higher levels. We were looking for this to kind of get up to the 880 level, but same thing. I would raise my stop loss underneath the 9-day moving average, raise it up to 796 to protect the profits. But also I wouldn't feel bad about taking profits early either around the levels it's currently at. I just think that the risk trade on this is kind of coming to an end. There's so much moving averages kind of coming down on top of it. I'd be happy to take profit here. Could go higher. So if you feel like speculating, I mean, you can just raise the stop like I was talking about. But I'd also be quite happy to take profit off the table on Anglo. I mean, that's up really, really well since the entry criteria. So no real problems there at all. So that's kind of that's also the theme across all the longs we've been trading. I'd be quite happy to take profit or raise the stop losses at least to the entry point so that you're not losing money. If you want to let it rally further, great, but don't lose any money, and because there's probably going to be a lot of money to be made on the downside. So, and once again, regarding making money to the downside, do remember that tomorrow night, Tuesday night at 5:30 Pacific, 8:30 Eastern, for anyone who hasn't attended our Capturing the Crash free webinar, we will be holding it tomorrow because we are at a pivotal time. Most people feel, geez, I feel like I've missed the opportunity to capture the crash. I feel like it's already too late. Well, the Fed and the market gave us an excellent opportunity as it rallied up into resistance over this last week to get some really high quality shorts on. So if you haven't been to the webinar, or if you haven't didn't get the full experience, make sure you come tomorrow. It's free, and you can register at acornwealthcorp.com/event. acornwealthcorp.com/event, and it's not to be missed. It will likely be a real staple in your trading for the next few months. Should you rock up. So looking forward to seeing you all there. acornwealthcorp.com/event. Happy trading. See you tomorrow.